Good morning, you magnificent melon heads. Today is January 31st, 2023. That's a Tuesday. I hope you guys are well. And we got two big stories dominating the headlines this morning. We've got Samsung earnings, which were just a pile of hot, flaming garbage. And we've got GM earnings that were actually really good. So, what is it, folks? Is it going to be recession? Is it going to be soft landing? Somewhere in between? Well, let's look at the numbers. Let's look at what happened in the reports, a little bit of the economic data, and see if we can't figure that one out. You guys know what I wear here on my sleeve where it says Perma Bear. I get that. So maybe that's, you could probably guess where I lay on this situation. But let's first shrink my big melon of a head and let's take a look at what's going on in markets this morning. We have got the S&P is currently up just barely, almost 10 points or a quarter of 1%. The Dow is up also a quarter of 1%, about 87 points right now at 33,803. And the NASDAQ is up also a quarter of 1%, 26 points, 11,421. So far the markets are saying soft landing. The markets appear to be paying more attention to the GM earnings. Also, McDonald's earnings were okay. But that's Samsung report. We'll get to that one. Let's take a look at what's going on in bonds right now. Looks like yields are down pretty much across the board. The 3-month is the only one that's positive at the moment. We've got the long end of the curve is down a little bit more. The 10-year is at 3.498, below 3.5 on the 10-year yield right now. So long duration yields coming down, short duration yields not coming down quite as much. That is more inversion in the yield curve. Very bad news for the future of the economy. Commodities, we've got pretty much red across the board this morning. We've got gold is down about 50 cents. Not a big deal there. About $1,922. Silver is down 15 cents right now. It was down a lot more than that pre-market, about 6.62% at 23.58. Oil continuing its slide with WTI crude is down another 60 cents this morning at 77.33, down about 0.75%. Poor natural gas, another red day in the natty gas field at 263, down another nickel or 1.64%. Where's the bottom for natural gas? Well, JP Morgan came out with a note this morning that said 115, I think was the number. Yikes. Maybe JP Morgan just called the bottom with their bearish bet. When the sentiment in the market reaches that bearish fever pitch, that's usually right about the time it might be time to start getting in. I am still not starting any positions in natural gas, but I am watching that one closely. Looks like the U.S. dollar index is pretty much flat right now. It was up a little bit pre-market. Now it's down about 6 basis points at 102.21. So the dollar's not really driving anything at this moment. All right, let's start off with the Samsung earnings report. And again, just a pile of hot garbage this morning from Samsung. Check out some of these numbers. Samsung defies chip downturn with aggressive capital spending. Now, that's important. They're keeping up their capex. Even though these earnings were terrible and their margins are virtually non-existent, Samsung is investing heavily in trying to capture more market share, while most of the semiconductor industry right now is cutting back their capex to try to batten down the hatches for a recession. Samsung's being very aggressive, trying to expand their business while profits are down. See if that pays off for them. The semiconductor segment, check this out. Profit fell by 97% amid high inventories. We're talking about semiconductors. We're talking about chips here. Any of you guys remember the chip shortage? Remember, we can't get chips. We can't make cars. We can't make this or that. The chip shortage. We got to hurry up and build chip plants. Boy, that changed real fast, didn't it? Now we're talking about high inventories and profits falling by 97%. That's not just a little downturn, folks. 97% is pretty much all your profits. Bye-bye. So this was really shocking. Now, we saw a little bit of this with Intel's quarter. They posted some really lousy results not too long ago. So I was kind of wondering, was that an isolated case or maybe it was sector-wide? Well, when I see this from Samsung, this is telling me this is sector-wide. And folks, chips are in just about anything these days. So this is screaming recession for me. Just wanted to give you a couple of the numbers that were in this one here. Where are we? Well, I had it. I gave you the important ones. Numbers down 97%. Massive miss for Samsung. By the way, you Apple bulls, we've got Apple reporting later this week. Better be careful. Right now, this stock is up. I don't know why. Samsung makes chips that go in smartphones, and Apple is the biggest smartphone seller in the world. including a lot of Samsung chips, by the way. So not a good sign for Apple. I'm kind of surprised to see Apple stocks in the green this morning, not going to lie. All right, that's the bearish case. Got to give you both sides of the equation here. Let's look at GM, because GM's results, totally different story than Samsung. GM smashes expectations and guides toward a strong 2023 despite a margin squeeze. General Motors' fourth quarter results easily topped a year earlier. GM guided toward 2023 results above what Wall Street was expecting, and the results come as the U.S. automotive industry is beginning to normalize after several years of record low inventories. All right, so the auto industry is beginning to normalize low inventories. That was the chip shortage that we talked about with the Samsung earnings. Well, that's over now. So we shouldn't be having any more supply problems in the auto industry. Here's a couple of the numbers in the report. We've got adjusted earnings per share of $2.12 versus $1.69 expected. Massive, massive bottom line beat. Revenue $43.11 billion versus $40.65 billion. Massive top line beat too. So I mean, just fantastic quarter from General Motors. And I wanted to scroll down here. I also noticed they're investing heavy in EVs. They say they're going to make 400,000 electric vehicles this year. And check out this one too. GM announced today an equity investment of $650 million in Lithium Americas Corp to develop a lithium mine in Nevada known as Thacker Pass. GM's to receive exclusive access to phase one of production, the automaker announced. So congratulations to you lithium bulls. I know a lot of you guys are out there watching right now. So GM investing in automakers, investing in lithium supply, top and bottom line beat. So the new car market looks good. The market for anything with a chip in it, which coincidentally includes new cars, doesn't look so good. So which one is it? My guess, if I had to guess which one of these reports was the more accurate report, I'm leaning towards Samsung. Now, again, guys, I have to give you my own biases. I tend to lean towards the bearish side. I don't really do optimism here. I try not to be too over the top with the doom and gloom. But we've watched in the inflation reports how used car prices have fallen precipitously over the last few months. Even though new car prices, they stopped going up, at least mostly stopped going up, but new car prices have been stubbornly high, mostly because the inventory has been so low. So I think you can attribute a lot of these good numbers from GM to the fact that new car prices have been sticky to the high side. I don't think that's going to last. Take a look at this chart right now. Keep in mind, used car prices are falling. And then I've shown this chart a lot. This is the chart of consumer credit in America, America's credit card bill, all right? Americans are up to their eyeballs in credit card debt. Americans are also right now not making their car payments. We've got car payments over $1,000 at an all-time high. We've got repos are on the rise. You can check out channels like Above My Pay Grade. You can check out channels like Lucky Lopez, where they've been talking a lot about the car market. And factor in this consumer credit debt. I don't think Americans are going to be signing these deals for big, expensive new cars for much longer. Not when people are losing their jobs, not when the story every day is layoffs, not when we've got a Fed that is doing everything in their power to put them out of work. So if I had to lean towards which one is a better barometer for the economy, the Samsung earnings report or the GM earnings report, I have to go with the Samsung report. All right. Now, you guys probably could have figured that out. If you've been watching this channel, you know I don't really do optimism here, but I just figured I would put that one out for you guys. Now, something I want to talk about here real quick is later today at 12 noon Eastern time, I am going to be on the lead lag report with Michael Guyette. I am really looking forward to this one. There is a link down in the description below to Michael's Twitter handle. I highly suggest you follow him. He is a very good FinTwit guru out there, and his Twitter Spaces and his Lead Lag Live report, they're fantastic all the time. He's got a lot of great guests on. Today it's going to be me. So check out Michael's Twitter, and I hope to see you guys there. I want to say thank you so much to everybody for watching. Thank you to my Patreon supporters. You guys are awesome. Link also down below to that, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.